Hey, in this video, I'm going to show you guys how to identify a trend in any market, equities, stocks, or crypto. It's important because you can make a lot of money, but actually more importantly, you could save money. Let's get into how to identify trends. For checking out the channel. Every day we put out a new video about cryptocurrency education, markets, giveaways, and more. Make sure you hit the subscribe button and notification bell so you don't miss out on any content. Now, let's go to the moon. You've probably heard the trend is your friend. I'm going to show you why this is actually very important and how you can be profitable by following a trend and how you can identify a trend. I'm going to show you 3 different ways. I love sharing technical analysis with people, so I want to be sharing these types of videos more often, and I want to get your thoughts as well. So there's 3 different types of trends. You guessed them right. An uptrend, a downtrend, and a sideways trend. And when we're looking at markets, you don't want to jump into a trade regardless if it's a crypto, if it's a stock, if you're in a downtrend. It doesn't make sense to buy a coin that's going down because you're going to see drawdown, you're going to lose money. Why not buy in uptrends? Why not learn how to identify trends so you know what an uptrend is and you know what a downtrend is? I'm going to show you guys how to do all that. So let's start with an uptrend. And what is an uptrend? An uptrend, so you usually don't see price move up in one green line in one huge bar up. I mean, in crypto sometimes you do, but you usually get pullbacks. So this is a higher high, a higher low, higher high. And we'll actually write that down, HH for higher high. So this is a higher high, this is a higher low, this is a higher high. So I'm going to show you guys how to identify trends with price action, like market structure, and then one indicator. I'm going to show you guys how to do it with several ways so you know for sure, okay, we're in an uptrend or we're in a downtrend. So this is what consists of an uptrend. Prices making higher highs while coming down and making higher lows, and moving on to make another higher high, and moving on to make another higher low. The price doesn't come back down and invalidate this low, or the market structure would be broken. So we have a clean move up with some pullbacks. That's a healthy market. So now if we go and we look at a downtrend, you have a downtrend which is similar to an uptrend, but now we're making lower lows, lower highs, lower lows, lower highs, lower lows. And we're going to go ahead and apply this to a real chart, and I'm going to show you, but I just want to get the basics out of the way. So this is a lower low, which is LL, and then you have a lower high. You have a lower low here, and then you have a lower high. So this would be one of the first strategies, just being able to distinguish lower lows. I screwed that up. Lower low right here, this would be a lower high, and this would be a lower low. So you want to be able to distinguish when price moves in a downtrend or when price moves in an uptrend. And let's go put that on a chart right now. And we did need to go over the sideways, which is just sideways price action, not really doing much, just stagnant. So this is Bitcoin right now, and we're going to do a few different things. We're going to look at an uptrend, but before we do so, when we identify trends, what's the first thing that I do when I look at a coin? I want to identify what's the trend. I just said it, right? So I go into larger time frames if I need to, because sometimes when you zoom out, and one of the trading mentors that I follow said like the coolest thing. Imagine you're in a plane and you're looking down through the window. You're like 30, 40, 50,000 feet in the air. You don't see any of the small day-to-day things. Like you don't see the noise, the cars, the animals. It's so minuscule. You're looking at the larger time frame. You're looking out of a plane window. This is kind of all you see. When you break down into smaller time frames, when you get closer to land, you start seeing the graph, you start seeing the prices, you start seeing the price action so much more clearly. But when you move out into smaller time frames, you just see the larger picture, if that makes sense. So what's the first thing that you need to do? In my opinion, when I come to an asset or coin, majority of the time I already know what the general trend is, but we need to look at larger time frames. So on the yearly or on the 12 months, so every candle's a year, we know that we are in an uptrend. And what is in an uptrend? Let's take the arrow right here, and this is in a clear uptrend. You can see we have the higher high, higher low, higher high, higher low, higher high. Knowing this type of stuff gives you an advantage when investing in Bitcoin. You can see that anybody who bought Bitcoin here previously has not been negative holding 4 years. So you know that anybody who's put money in Bitcoin every 4 years after, they have actually been profitable. So if you're investing, maybe have a longer time horizon if you're going to hodl. And it doesn't also matter where you buy here during those couple years of that pullback, of that bear market that we've seen. Bitcoin's always went higher. We've always had the halving, and Bitcoin's always went higher. So on the larger time frames, we're on a clear uptrend. On the larger time frames, it's very clear. If we go to the month as well, to the monthly, and then we'll work our way down. So we'll work our way down. And you want to know this for an asset because you don't want to come into an asset and purchase it and then start holding it in a huge downtrend. So when you find an uptrend, that's the first. I told you guys I'm going to show you guys 3 different ways to identify trends, and that's using the price action and just like basic market structure. So basic market structure would be like this: the higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then we broke down here. So that would be the first indicator, the first way of identifying a trend for looking for that market structure, for looking for that uptrend on how it specifically is moving. So you can really tell if a coin or an asset is in an uptrend from the price action. Is it setting highs, higher highs? Is it setting higher lows? And the second thing is implementing a trend line. And I actually am gonna have an episode on trend line. I think I'm gonna fit trend lines, support and resistance in one video, and then I can cover that and how to trade using that. Strategies using support and resistance, strategy using trend lines. So you can see right here, I'll draw a few just for this example, but you can see here we have a trend line, and a trend line you want price action, the price to touch the trend line at least 2 times, preferably 3. So you can see we had 1 here, 2, maybe 3 there, 4, 5, 6, 7, and then here it broke down. But we deviated away from this trend line. Like right here, we could have drawn another one. But at the end of the day, you can see right here, when our trend line gets broken, it's an indicator that the trend might have changed. And you can see that this is a longer trend line. It's started from the August 31st, 15th, let's say, and this one is more violent, like it's more slanted to the top at March 27th, 17th. So this one was a shorter term because in uptrends, you have different types of trends within those trends. Believe it or not, it gets tricky. So you can have a huge bull market, but we have a crazy blow off top or whatever it is for the last few months or year. And then within bull markets, you can have pullbacks like we saw this bull market. And I'll show you when we get into that. And we can have, 30, 40, 50% drawdowns. So we can have a bull market, which is our primary trend, but we can have secondary trends, which are smaller. So within our primary trend, we have a secondary trend, which is just a small pullback. So we can continue on our primary trend. It's you see it everywhere. So you can see when this broke right here, what were we doing? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. and then we didn't put a higher high here. We actually broke this trend line. So you can see this trend line would have been buying, nice buying opportunity here, an awesome buying opportunity here. Here we broke down it. So you can see two things. One, we got rejected here from this trend line, and that is not a good sign. That's a sell. That's a first signal to sell. And then you can see here, we put in a lower high here because we did not break this high. So you can see weakness, and we got rejected here. So just using this simple, I literally showed you guys just using this simple price action to determine the market structure with higher highs and higher lows, and then drawing a trend line, it could show you when to get out, when prices super overextended and your trend lines are breaking, and then we start making lower lows and lower highs. Maybe the trend has changed. And I told you I'm going to show you a third way, which I think really seals the deal and really helps you jump out of markets. Because if you need to see something visual, then this is it. And I'll show you guys that, and I'll show you guys different alternatives that you can use. So you can see here, we made a low, we didn't break the high, and now what did we do here? We set a lower low, lower high, lower low, lower high, and then boom, we broke down this trend line here as well. So just looking at that, you can tell that this has transitioned from an uptrend to a downtrend, and there's so much other things you guys can use. This is just the basics. That's why I started with how to identify trends, and I'm going to lead on with more videos because you can see different things from like RSI to the actual candlesticks here, like looking at the bearish candlesticks, and then you can form more confluence on why you're going to sell here or why the price is breaking down. So that's two different ways, using the trend lines, looking for those trend line breaks and rejections here, and then transitioning from higher highs and higher lows to lower lows and lower highs. Now let's actually go to more current price action here. So you can see this is the ultimate uptrend. There's no like debating about this. This is an uptrend. Within our uptrend, we had a secondary trend right here, a downtrend. And we had an uptrend from March 20th. We are in 2022, a month away from March. So let's say we've almost been an uptrend for 2 years now, which is pretty long, honestly, for Bitcoin. Generally, the up moves have been 2 years. So you can see from like 2016 to the start of 2018. So pretty much the same timeline. But let's keep going ahead. You can see that we are in this uptrend. We had a 2-year uptrend so far, but this downtrend has lasted from May all the way to July. May, June, July, August. So about 4 months, let's just say maybe 5 months max. So when you have a 2-year-long uptrend, and then you have a 4 or 5 month secondary trend, it sounds normal, right? So many people like start going bearish, or they think that the world's gonna crash, but you just have to look at the larger picture. If you actually zoomed out, and this is why when you're identifying trends and you zoom out, it's important because you can see that we gained this much traction, and then people are tripping out on our first major pullback. But if you knew how markets move, you would probably be expecting a higher high. You know, yes, we do need to consolidate. Markets won't just keep moving up. We need to pull back. We need to make that higher low. We need to consolidate. We need more people to accumulate, whatever it is, and then we move forward. If not, we break back down into a downtrend. Simple as that. So if we're looking to implement another tool to help us identify trends here, that is going to be the moving averages. So moving averages, I have them right here, are the most used trading indicators, and they are lagging trend identifier indicators. They help you identify trends. And how can we use that to our advantage? So the moving average, as I mentioned, is the most used indicator by traders like you and I and hedge funds. The most used is the 50, which you can come here, inputs, and 200. So I have 200 here, and I have the 50 here. And when the smaller day So the 50 crosses the 200. So the smaller time frame is generally quicker because you're taking the last 50 days of price and averaging them into a straight line. So 50 days is a lot quicker than 200 days of data. When you're looking at moving averages, there's a few things to know. When moving averages start pointing up, like I mentioned, it's a lagging indicator. Price goes up, moving averages follow, so we're in a bullish scenario. When you're using two moving averages in the smaller time frame, the 50 crosses over the 200, that's called a golden cross. And that is a buying signal. So you can see when that happened here. So with the golden cross over right here, after the huge crash from the COVID crash, this was about $8,600. You can see after we got the death cross right here, which is when the 50 crosses over the 200 from the upside, you can see that we got to sell around $40,000. That is an awesome trade using these moving averages. It helps to identify trends. And you can see clearly right here, we didn't catch the bottom and we didn't catch the top, but we got a safe entry and we got a safe exit. If you ignore these exits and entries, then you're in on for yourself. You can't blame anybody. But if you follow them, so you can see here, we bought here and this was 39 grand and price went up to 66K. We actually just got the recent crossover to indicate we are now in a downtrend. You can see here, it didn't give us the sell here because it's a lagging indicator. So now you can see we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs. And Bitcoin just pumped. We had this really nice pump from Bitcoin. Is it going to be another lower high, which sets us into a lower low? Or are we going to break this trend line and, reverse in price? So when you start to understand the different types of trends and how to identify a trend, you become more patient in the market. You don't try to go ape long crazy right here. That's a lower low, so you could be counter trend trading, but you need to be a little bit more advanced. But you know what I mean. You're not going to go crazy long on a huge downtrend when the moving averages are pointing down, when the uptrend has just been broken, when it's not looking good. And you know what's crazy? A lot of people do not look at charts. So when you start looking at charts before you buy an asset, if you want to have an advantage over another market participant, or if you just want to make some more money, then I recommend looking at charts and just start paying attention to this. You don't have to go too crazy. You don't have to, spend a ton of time on, but it's just good to know at the bare minimum, what is the trend? Are we in an uptrend? Are we in a downtrend? What are the moving averages saying? Are they pointing upwards? Are they pointing downwards? Are we having a golden cross? Or are we having a death cross? And it provides opportunities. They also provide awesome support. This is a sexy buy. This is a sexy buy. And then resistance as well. Boom, dirty short. So could this be another dirty short right here? We'll see. So I love using technical analysis. Put your thoughts below. I'm going to add a ton of videos to this series. So if you're watching and you want to learn something specific, I think next will be like trend lines, support, resistance, and then we'll move on to basic indicators and then start getting more advanced. So I don't want to lose anybody. And this is the best time to practice when coins aren't really doing much and you have the time to just kind of pick any coin while there's not much volume and you can kind of just play around. Backtesting is the best thing you can do, so you can see if your strategy works, if it is profitable, and then you could pull it off in real time using stop losses, and then just honestly practice. Then you start pulling off those $100,000, $1 million trades. So hope you guys got some value from this video, and I'll see you guys tomorrow.